All right. Today, I think I just wanna, focus especially on the entries. I see most people were struggling in terms of the entries, and also identifying structure, especially the levels. I wanna emphasize on that, especially knowing when to enter a trade is I think is very, very important. In terms of, what we're trying to achieve, also in terms of trading wise, that those are important things to I think to look at. Or maybe if you guys have any requests that you wanna maybe want need some help on, then I think we can also do that. But let me just first start with this. Let me just delete everything actually. So as you can see, starting from our top-down analysis on gold, we were very much bullish. Um, for quite some time now, we're very much bullish. So you just want to be looking
Yes.
at our recent levels. So remember, I did speak about this indicator, the higher high, lower low indicator. It will mark
Yes.
off those levels for you, so you can be in a position where you can say, okay, I see here there's a higher high here, there's a higher high here, there's a higher high. So you can pull those levels, look at the recent, levels, those would be very important coming into what we're trying to achieve, right? So the top one, I'll just mark it with the horizontal line, right? So you can now go to 1 hour. And then when you get to 1 hour, as you can see, it's like, okay, I see price broke above this higher high, this 4 hour higher high, give us an indication, came back to correct back to this higher high, shot up, gave us another indication at the top of that higher high, and then came back to read to correct back into this higher high, the 4 hour higher high, right? So, and I did remember yesterday I did say I prefer more of a setup which comes back into a previous high high before we can continue to shoot up, right? Because it is much easier for you to enter than the one that just comes and retests at the top of the higher high. So which just like this one came to retest at this top and then shoot back up. But obviously when we wanna put our levels of resistance and so forth, obviously there will be levels where we can enter trades, to the upside, knowing that okay, we see that it bounced off here, but we can go in down to 15 minute, 1 minute, we can be able to take those trades, right? But I also said the one that I prefer is the one that actually comes to correct into the previous higher high, or whether, if it's a downtrend, it will be something like this, right? It will be this one that corrected just at the top, at the bottom actually of the lower low, and then we have the one that actually corrected back into the lower low before it started to continue to shoot down, right? So these for me are much easier to anticipate, right? These are much easier for you to anticipate because once the correction comes back into that swing point, into that trend, before it can then continue to give that continuation to the upside, then it becomes much easier for you to be able to catch those moves. They become very much predictable because based on the indication that happens from the beginning that anything above that higher high would be bullish, right? Same thing as here, anything below that that lower low would be bearish because the indication came to the downside, price came to correct back into the lower lows. Same here, the indication came, gave us a higher price, came back to correct into the higher highs, then before it gave that continuation to the upside. So that is the same thing that we had actually with gold today. Actually, since yesterday, remember when we were analyzing yesterday, and you guys did ask if you can enter a trade, and then I told you guys not yet. You can't enter not yet. We wanna see We want to see a nice clean break to the upside, retest that level and then to continue to shoot up, right? So now, once we've marked all of our levels, we want to go down to 15 minutes because now this is where most of the things happen, right? So we have that swing point, which is our higher high at this point, and then we have that higher high where the indication ended, because this movement as a whole was an indication to the upside that price is willing to buy above these highs that are here, right? So price started to correct back with a nice bearish structure on a 15 minute. So we wanted to see a break above that structure. We wanted to see a break above that structure before we can start taking positions, right? And then obviously above this level also, in terms of once we break above this level, we know that anything above it is already bullish, right? So price did do that, as you can see. Price was since yesterday, actually it was under here, and then it consolidated until this today morning around London session. Price broke above, as you can see. Once price broke above, it came and retested that level, and then it started to push back up to the upside, right? So and remember, our entry point was the way we enter trades. I said break, retest, and then that break a high, it will be your entry point, right? Aiming to where the chart would want to go, right? For instance, same something like this, which would be your entry point, right? So this is something that will be your entry point, and your stop loss will just be below, your higher low, that, or that retest, just below that retest. And if you go to five, it appears even much better on 5 minutes, because that 15-minute move came here, right? So my entry was here where price actually broke above, because I saw this consolidation. This consolidation, it wasn't convincing enough. I wanted to see a nice clear break above that, a retest, which would be a higher low, and then obviously, right? So price came here, gave us this higher high above, also this 5 minute consolidation, retested that level, and then shot up. So my entry was actually here when price was coming back. This was my entry. My stop loss was just below. I think my stop loss was just below this consolidation here, because the consolidation was above the entry, was above the level of support, right? So as you can see, price did what it did the most, and then started to shoot to the upside. So, and we are still in a trade even now. I'm currently up, I think, on one of my accounts, I'm currently up $5,000. The other one, actually, two of my accounts, I'm up $5,000 each. And then the second one, I'm up $200, which is that is a personal account. And then there are two ones, Proforms accounts. Yeah, yes, yeah. So, yeah, in terms of that. So that's how basically you want to trade ICC when it comes to taking these positions, because I feel like, especially with this entry thing, is something that I actually um saw it happen. I was like, okay, because it, like I said before, price can easily break above, right? And as much as it broke above, it can easily come back, right? So that can be a fake out. You can easily break above and you can easily come back, that shoot back down, right? So most of the time I will get caught, because now, if for instance, if price breaks above here, right? Price breaks above, and then I enter already at some point. So let's say, okay, it's like, okay, price is above. Let me just take a buy. It will find me there, and then we shoot to the next level. Chances are, once price goes down, it takes me out immediately. And then that retest, which took my account out, then it goes your direction. And it happens too many times to most of us. It happens too many times to most of us where you took an entry, you were in a little bit of profit, it went down on a drawdown, and then it took you out, and then it went your direction. So you are there pissed, like I wasn't wrong, but what happened? Maybe there was an early entry. Yeah, it was an early entry. It definitely was an early entry. You understand? So I feel like this works better for us. You wanna see price break above, give that higher low, and then at that higher high, you enter that in the trade to the upside, because price already, once you having higher highs, you need a higher low. Same thing if price was to break below here, price was to break, and if we're bullish, the overall trend also matters. Remember, the overall trend matters. If we're to bearish overall and price breaks below, you want to have that lower high being created before you enter the lower low, so that you can take that trade from this level, because now on a downtrend, you're gonna have lower lows and lower highs, lower lows, lower highs, lower. It does a downtrend, right? And an uptrend, you're gonna have those higher highs, higher lows, higher highs, higher lows. So that is what is actually what we were, anticipating. But yeah, overall, I think that sums it up on gold. I would like to know what you guys probably need help with, so we can easily try to address them and see how I can help you guys.
Thank you so much. My question then would be, just coming to the chart, let's say like myself, just coming to the chart at this point, where would I begin from to look for my well, where would I begin my markup from in order to determine my entry?
All right. So remember, I did mention the top-down analysis, right? The best way
Right.
to, yeah, the best way to, let's say, because most, for instance, let's take you from Jamaica. I think it's early in the morning right now, around 9 a.m., 8 a.m., 9 a.m., right? So you want to start your top-down analysis, right? Top-down analysis, starting from knowing the trend, right?
Right.
So the trend would come from either 4 hour
The 4 hour
chart
or the 1 hour.
or the 1 hour. Yes. All right, Eric, I will come back to you. Right? Um, and then you wanna obviously once you've identified your trend, you can then use the swing points. The swing points, right? Swing points, which would be um in this case would be higher highs or higher low or lower lows, depending on the trend you are in, right? Those
Right.
are where the indication comes from. On the higher highs, that's when gold, I mean, let me just not say gold, any pair gives you an indication that it's going up. That's when it breaks the highs. So on the lower lows, it's when the pair is giving you the indication to the downside that the trend is bearish, right? So once
Right.
you've marked all of these, just like I did with gold now, just a few seconds ago, 2 minutes ago actually, when I showed you from the 4 hour, I used those swing points to be able to come down to small time frames, right? And then once you've actually done that, what you wanna do is you wanna move down to 15 minutes, right? You wanna move down to 15 minutes and 15. Let me just say 15 and 5 minutes. Ne? The reason being not yet for entries, but just to understand the trend that is in 15 minutes, right? For instance, if you are in a bullish trend from your 4 hour or 1 hour, we are bullish. You wanna correlate that with the smaller time frame so you can be able to take those entries, right? So that trend on a 15 minute, if the 15 minute or 5 minute is bearish, you want to have a break of that trend or a change of the change in terms of market structure, changing the direction and be in correlation with the overall trend. And you want to look at where price has been bouncing off, especially on the 15 minute, right? where price has been bouncing off, levels where price has been bouncing off, you can mark off those small levels. It's like, okay, I see price has been bouncing off this level. It broke below, it bounced off this level. It broke up, it bounced off this level. So those where you have at least 3 or 4 bounces of, you mark off those levels, right? So once you've marked off those levels, and you know already from the trend on the bigger time frame and your swing points, and then also 15 minute and 5 minute, the trend and correlation is in place. The trend and correlation is in place. The only thing left for you to do now would be to actually take those trades. Now you will just have to wait for some kind of indication, probably to the downside or breaking maybe a higher high on a smaller time frame, 5 minute or 15 minute. You're just gonna be waiting for something like that to actually happen. Like for instance, I will give you a prime example here. Let me just delete this quickly. Right. So we had this, even though we had this entry going up, right? I want to show you something, right? People who came in late, they would have said, okay, I see everybody, the guys are on I want to buy. That means the trend is bullish, right? Okay. But I see prices bouncing off this level here. So I'm just gonna delete this quickly. I see prices bouncing off this level on the 5 minute, right? And price is bouncing off this 5 minute. It broke above, bounced off this level again, went up, broke below, but bounced off. That means, and still now this on a smaller time frame would have been the indication that price is able to buy above these levels. You get what I'm saying? Price is able to buy above those levels, right? So remember, we're still bullish, right? On a bigger time frame. So you wanna be in correlation with what's currently happening. Obviously price would come probably retest this level. Now your entry would have came where price couldn't break below, like it tried, went up. Now it went up, gave you that higher high, go went back down, gave you the higher low. It goes back to our entry style, how we take those entries, right? So now your entry would have came from here. This is how your entry would have came. Just stop loss just below, and then your entry would have came something like this. This is just for demonstration purposes. This is how you enter. You don't just enter because we're saying we are bullish. You want to know why you enter and how you can also be able to ride the wave. Because I always emphasize, especially now that we have gold, we have Nasdaq, we have USD, they're giving us higher highs like every week. They're giving us higher highs like every week nowadays. You understand? We need data, we need structure to be able to see things like this. You don't just ride a wave because now we have a higher high. Even if now gold it goes up and creates another higher high just by 3,900 now. We don't have structure above this high where the indication ended. We don't have a structure above this high. We don't have a structure above this. We don't have a structure above that high. But that's why we're aiming for that high, because we have structure which we can use going up to that high. But once you don't have a structure, you don't enter. You don't take those trades. Better to not lose money than to lose money. You get what I'm saying?
Sure, sure, absolutely.
Yeah. Um, I think Eric said
Very
something.
good. Very good. Thank you
Yeah.
so much.
I'm glad. I'm glad. Okay. Eric says my problem is I'm undisciplined unless in demo, and I gamble with over leveraging. All right. So I've seen that most of the people also are struggling with this thing, right? So in terms of taking your trades, there's I don't know if you guys are using MT5 where you are, but if you have MT5 and you go to the charts on MT or MT5 on your phone, on your mobile, you go to your MT5, there's a kind of a clock thing at the top. There's a kind of a clock thing at the top. It will usually start with a buy limit or a sell limit, depending, right? There's also a button written SL. There's also a button written TP, right? So what you want to do in these cases is you want to be able to know how much you risk in per trade. For instance, if you were to take this trade just from this what I just showed you now, all of this movement here, you can easily, based on your stop loss, you can easily know from your entry point to your stop loss, say, okay, I'm willing to only because it will show you how much you're willing to risk on your mobile. It will show you how much you're willing to risk pay this trade, and based on your stop from your entry to your stop loss, it will show you this is how much you're risking for this trade. So I think it builds good trading habits, and it helps with the psychology of actually taking those trades, because I feel like I don't want to like I said the last time, I think on another video I said I don't want to what confuse you and say no, go and use what the pips calculator. That's a whole nother step, that's a whole nother thing to do. Rather use your MT5, make those levels before you enter that executive market entry, and then you can adjust your stop loss before you even go into a trade, because now your stop loss would then tell you, say, okay, this is how much you're willing to lose when you're using this lot size, but when you drop down you can risk this much. So if you risking $100 per trade, then you know, and always aim for at least 1:3. Almost of the time 1:3 always works best. You understand? Even on personal capital, make sure that the broker that you're using is using MT5, or choose an MT5 account, right? So, and also, okay, on Top Step. Okay, does Top Step have? Oh, Top Step doesn't have Meta 5 Trader. It's an American broker, right? Man. All right. Here's the thing. Try to not use 5 minutes. Study structure. Not use 1 minute to scalp. Like I had also say some the same thing, and I fully agree. Scalping is like is scam. Is a scam. You this thing of scalping. You see these guys on you on what is this YouTube? You see these guys on Instagrams. They just going in and made 10,000 in 15 minutes. What they don't tell you is the lot size they used to make that 15K. What they don't tell you is how many points, because this move that we are currently in now, because we took this entry since from here to here. That guy would have only took that move up until here, and he would have made what he wanted to make for the day, and that's it for him. That's like 5 pips, 5 points actually, which will I think will be 50 pips or something on gold. That's enough for him, because he's risking $5,000. He made like what, 15. You get what I'm saying? So those are the kind of things you don't want to compare yourself with these guys. Don't focus on your own journey. Even if you don't use the MT5 thing, tell yourself I'm risking $100 for this trade, right? If it start to go to $100, stop that mentality where you think, oh, it will go back up. It won't. It won't go back up. Close the trade. It's a loss. Take the loss. Look for another setup. Because starting out, in most cases for us, we hold the losses longer than the profits, because now when you're in profit you're starting to doubt everything start to come out. Now you mixing ICC with ICT, with SMC with SMT. You mixing everything. Now you're seeing demand zone. Like, for instance, if you were in this trade from this point and you started to be in profit, you would have easily closed it, because now you say, oh, there's an order block here. I see an order block here, and also there's an order block here. So the market might react to any of this thing. That's not how the market is just doing that to manipulate you. But we know structure. We study structure. We know that the overall trend is bullish. Now the small time frame, they're in correlation with the bigger time frame. So we overall bullish. The price will continue to push to the upside. So we don't have to worry about these things. Remove those things from your mind. Learn. Be a kid. Be like a kid again. Learn from scratch. Remove everything you've been taught, like those demand zones, supply zones, all those kind of things. Price action. Just learn price action. Easily price action. That's it. Understand support and resistance. That plays a bigger role, because now this level now it becomes a level of support once price is above it. Once price is below, it becomes a level of resistance. So price came down to bounce off this level and swing to the upside, right? When is the on the downside? Price went up as like this acted as a ceiling, so price can push to the downside. You get what I'm saying? So don't overcomplicate things for yourself, because you would be profitable at until some level, and then your losses will be greater than your profits. All right. Is there anyone else?
Yeah, I see what you're saying. That's why I'm trying to force myself to just stay on the 1 hour time frame and do everything from that.
Yeah, because that's good. That's actually good, because the 1 hour is what's currently happening. Is for day trading. The 4 hour is more for like swinging. If you wanna swing, wanna hold for like 2 3 days, probably 4 hour will be the best. Especially in some pairs, like not volatile pairs, especially like your forex, your currency pairs. Yeah, you can hold like a trade for like 3 4 5 days for you to only hit TP. You understand? But when you're trading volatile pairs like gold, Nasdaq, USD, the SP 500, those indices, CFDs, they very much volatile. So you can't hold unless if you're trading with serious money.
Yeah. Yeah, I got a lot of work to do. But I lost two of those three accounts that I said I had. I still have one left, so I'm just gonna take it real slow.
And another thing I want to speak about, when you buy Profams accounts, when you buy at least two, three, or whatever you can buy, right? Here's the trick: don't trade all of them at once. Try trading this one this week. If you end up meeting the targets, or if you end up blowing it, reaching your drawdown, and then you get eliminated, it's fine. You still have four more. Do the same thing every week. You trade one. Once you reach a target to this one, you move to the next one. It builds a level of confidence as time goes. You understand? And you're not pressurized. And because the psychology of us people is, it's so narrow in a way that any little thing can affect you, can affect your trading, especially when you know all of your three accounts are in a drawdown. Now all of them you risked, 1:3 with $1,000. All three of them now, they are on minus 3,000 US for the day, and your daily max drawdown is like 5K. So already your psychology is kind of messed up in a way. You get afraid, like everything is affected. And trades that will come after will not be profitable, because they will come from a point of revenge trading where you will end up losing all of those trades. We left with 8 minutes, guys. Okay. Does that help?
Yeah, that helps because I was copy trading two of them, and then I'd rotate the third in.
Yeah. So just you see now, those are the kind of things, because now once you're in a drawdown, all of them are in a drawdown. All of them are in a drawdown. So that was, I think, the most difficult part for you. We're just about to hit TP very soon. We like three points out. I see somebody send the message. Okay. Yeah. I see Tom is saying. All right, no problem. No, definitely. Once you get to, to trade all of them at the same time, it will definitely affect your psychology in ways that you didn't even think or anticipate. And once you blow all of them, or you get eliminated, yeah, it affects your psychology even worse. I remember I once when I started to do Profirms accounts, I passed the first phase in like a day, and I had to wait the 3 days period. So I was trading small lots, fine. I passed second phase. I passed the second phase, right? I passed the evaluation phase also, and then once I got to the live account, I blew everything one day. Everything else took me a week to build. The following week on a Monday, I was trading gold in the morning around London session. I blew within less than 30 minutes. Everything. Everything less than 30 minutes. That affected me for like 3 weeks. It affected me for like 3 weeks. Yeah, believe it will be different. Believe it will be different once you develop that belief system also, and also that mentality where you say, I have to make this work. This has to work out for me, and you stay grounded, you ground yourself, you focus, let go of things that are not ICC related, just like I was saying. Because now once you get to your analysis point and taking entries, everything start picking into your mind. You start seeing things, you start seeing butterflies, you start seeing head and shoulders, you start seeing elot waves, you start seeing other blogs, you start seeing all of these things, because you had to learn all of them all at once. That's what you did. You went out and you tried to learn everything all at once, which then end up affecting your psychology at the end of the day. You get me? So you don't want to be in that position where everything else is just coming through on you know, and then you end up doubting your own analysis. Eliminate everything, watch
If I
videos. Uh-huh.
question, if I were in the trade right now, noticing this pullback, I would be prone to take a profit and leave. What would you do?
For me, I trust the process. Obviously, obviously also going back to what I said earlier. I know that we are overall bullish, and if I was aiming for this high, I would have hit TP. TP was hit actually on that high, but I'm aiming for 3,900, right? I could have easily closed also. I could have easily said, no, I'm closing out. It's still fine, because as much as you aiming for TP to hit, it might not even hit. It might just like it's doing, it might just continue to shoot back down. You understand? But for me, I've already adjusted my stop loss. I'm above a level where I'm comfortable with taking those profits. For instance, there's this level here, as you can see, where price bounced off to give us this low, and price bounced off to give us those highs, right? So I'm thinking buyers are also pushing these levels. So hence I was saying, studying structure is very much important. To study structure is very, very, very much important. But there's no loss in taking your profits. Already if you are secured with what you were aiming for. But don't close in because you are afraid. That's a whole different thing. Close because you reached your target. Close because you are fine with what the market gave you.
Okay, fine. I'll be watching further.
All right, all
See,
right.
it's breaking the level down now. It's breaking that level. It's going beyond that zone now.
No, it's still fine for me. I think in terms of profit from where I've entered until this point, and my SM, my stop loss is just above entry point. I can move it to these levels, and once I can see some push to the upside, I can move it to these levels. I knew price would, once it creates a high, it will need to come and create a high low before it can go up and create another high. You understand? So that is
Fair
what
enough.
price is
Fair.
currently doing. So it's building the structure going to the upside. All right, guys. Yeah, I think that's it for today. Thank
Thanks
you very
much.
much.
Great job, as usual.
Thank you very much. Bye.